We are watching Billabong very closely. Are you expecting we could see it come back online today with some news that it struck a deal?
Liz, there'll be a lot of nervousness for Billabong shareholders, and that's because we were really expecting to hear an announcement yesterday morning. But of course, we've seen that trading halt being extended for Billabong and a lot of speculation around that 60-cent bid coming through from Paul Nord and Sycamore. Now, that bid was always highly conditional and it was a non-binding bid. So I guess one of the things the market's really watching out for is the earnings outlook for Billabong, because that 60-cent bid does indicate that perhaps the earnings that the market has for Billabong may be too optimistic at the moment. Now, Billabong is predicting EBITDA of between $74 to $85 million. Now, that was subject to confirmation from an accounting firm for the Sycamore bid. But of course, with the exclusivity period having ended yesterday, there's a lot of speculation that perhaps we have seen that Sycamore bid fall through, and instead that perhaps VF and Ultimate Capital are still in the game there. Of course, if no bids come to the table here, we are going to see Billabong with a huge pile of debt in its balance sheet in question. The market are probably estimating that we'll see a highly discounted capital raising of around about $100 million. So Billabong still offline at the moment. This bid is crucial to not seeing a highly discounted capital raising from Billabong. And Billabong shares last traded at 45 cents compared to that non-binding bid coming through from Sycamore at 60 cents. And we'll be watching to see whether that bid still stands.
Mirvac Group making an announcement this morning. It's launched a $400 million capital raising to help fund its purchase of 7 office properties from GE. How do you expect investors to react to this one?
Well, yesterday we saw a third quarter update from Mirvac, and really if we have a look at Mirvac's strategy, there's a few things in there that it's focusing on. One of the things is that it's trying to unlock value in its retail portfolio. So it has this development pipeline of $800 million over the next 6 years. Its focus really in that retail space is going to be on metropolitan apartment projects, master plan communities, as well as some select urban edge developments as well. But really what we're going to see Mirvac targeting is gearing of between 20 to 30%. That means it needs to raise its gearing level. This capital raising today is on the back of an acquisition, and this is part of its strategy in the office space, which is to create and buy its office strategy. So it is just over a $500 million acquisition with an initial yield of 7.8%. So that's the initial passing yield, and when it's fully letted, it'll have a yield of 8.4%. So the $400 million capital raising is for this acquisition. It looks like it'll be done at $1.69. So that's not a huge discount to the last traded price, which was around about $1.75. Now, Mirvac has come out to reiterate their full year guidance, and that's for 10.7 to 10.8 cents per share. So all in all, this acquisition looks like it's going to be neutral towards earnings this year, but it'll start to be earnings per share accretive from next financial year.
Just finally, Julia, resource stocks were really the big winners this week for a change. Can we expect that to continue though, or is the appetite for yield still likely to dominate into next week?
I think the combination of the stronger US jobs numbers last week with the China trade numbers was a great combination for commodity-based stocks this week. We saw commodities rising, and in particular, if we have a look at some of the key performers in that materials space, we saw BHP up by 8% this week, Rio Tinto up by about 7%. The gold miners also bouncing back with St. Barbara Mines and Northern Star up by around about 20%. So some very strong performances. I think, though, we are going to see commodities coming off, and that's really because the focus overnight wasn't so much on the equity markets, but more on the currency markets, where we did see the US dollar breaking above 100 yen for the first time in 4 years. So that stronger US dollar having a negative impact in terms of commodity prices. We saw gold prices lower, copper prices were also down by 1.2%, and oil prices down by 0.8%. We have a look at our majors traded overseas. BHP was actually up by 1% in London, but down by 1% by the time New York closed. And if we have a look at Rio Tinto, well, down in both London and New York, down by 0.3% in London and down by 2.5% in New York. So expecting to see those materials having a negative impact in terms of the market, but capping off what's been a pretty good bounce back for the materials, the resource space, and of course some better technicals for BHP and Rio Tinto with an uptrend now confirmed in place.